Investor, and this industry still, though, remaining under the microscope in D.C. In a story we touched on moments ago, the Senate Agriculture Committee holding a hearing today examining the risks, regulation, and innovation within the space, featuring an appearance from Rostin Benham, the chair of the Commodities Futures Trading Commission, the CFTC. So joining me now is Ben McMillan, founder and CIO at IDX Digital Assets, which says it offers the first family of risk-managed digital asset trusts to investors. Thanks so much for coming on. So before we dive into what we heard during this hearing, explain the role of the CFTC as the U.S. derivatives regulator and its relation to other agencies like the SEC from your vantage point, Ben.
Yeah, that's an important distinction too, because the CFTC regulates really the U.S. commodities markets, while the SEC governs U.S. securities markets. So it's important to note that these two agencies were created by separate legislation. They have completely separate governing commissions, different powers and approaches. So, we are seeing a little bit of a regulatory land grab for oversight powers on, as it relates to digital assets. And so it's no surprise that the CFTC specifically is pushing for oversight into the crypto spot markets. Right now their oversight is really limited to futures and derivatives markets. And it's also interesting to note that they were testifying before the Senate Agriculture Committee. And Rostin Benham, in his comments, noted that crypto is unlike other commodity markets in its high level of retail participation, which is all the more reason that spot exchanges should be brought under their oversight. Was his contention.
So, what kind of regulation do you expect, Ben, that we might see this year?
That's a good question, and that's kind of been the overhang in the crypto space. Really starting last year was what's the regulatory landscape going to look like for both cryptos as securities or not, as well as stable coins. We saw the SEC make a move to allow 40 Act funds to start trading futures contracts last year. We launched our own 40 Act fund to that respect. We also saw the CFTC actually fine Tether $41 million for lack of transparency around their collateralization. So regulation isn't bad, particularly when it protects consumers. And I think that was the contention of Rostin Benham, was that this is very retail facing, therefore it needs to be protected. The threat, of course, is too much regulation, so, to the point where it starts stifling innovation becomes a concern. So, what does it look like? I wouldn't be surprised if we start seeing, greater regulatory oversight over spot exchanges like Coinbase, in the near future. And then again, with stable coins, I think it's very clear that the powers that be are going to force stable coins to be issued by, financial systems, FDIC.
Ben, let me ask you this. Which agency do you think, whether it's the CFTC or the SEC, will take more of a leading role in regulating cryptocurrency this year?
Well, that's the big question. The CFTC is coming out very strong. It's worth noting this was a position previously held by Gary Gensler. And, we've got kind of a regulatory alphabet soup of regulatory agencies. The FDIC has kind of faced off with the CFTC. I wouldn't be surprised if we start to see the demarcation be, anything that's securities, such as futures contracts, would fall under the domain of the SEC, which we've already seen, and then spot crypto to, falling under the domain of the CFTC as more of a commodity. So I think this is probably, what the market was anticipating. So it shouldn't come as a huge surprise.
Mm-hmm. Well, certainly the second hearing for the crypto industry in just 2 days. So I think a lot of people are paying even more focus on this. As the CIO and founder of IDX Digital Assets, Ben, what's in store for your company this year?
Well, we've been looking everything we do is risk focused. And so, for example, our mutual fund that we launched last year was designed to mitigate the risks of participating in this asset class, especially as we see Bitcoin going more mainstream. We're having investors enter this landscape that aren't used to 50-60% drawdowns. And so we've actually been waiting to put risk back on. We've been in cash since we launched. We actually just started getting back into the markets yesterday. And so, we're starting to see some new life come back into crypto. And we're cautiously optimistic going forward.
And do you agree, there have been a lot of guests on our show who have said the more regulation, the better, actually, that they think crypto will rise, the price of these tokens will rise if we do see more regulation?
Yeah, I think there's a fine line there. Of course, I do think there's a lot of consumer concerns about kind of the unregulated nature of crypto, particularly among the broader investor base. So I do think some regulation is good in terms of making it more transparent, making it safer for consumers. The threat of overregulation, of course, is always out there, but I think part of what we're seeing in the crypto markets is a response to clarity around thoughtful regulation. So ultimately, I do think so far what we've seen, this is a good step for kind of the continued mainstream adoption of Bitcoin.
All right, Ben McMillan, founder and CIO at IDX Digital Assets. Ben, we appreciate you taking the time.